The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hi, everyone. Welcome to another edition of Breakout Investing on TFNN. Happy Monday. Hope you had a great weekend. We have, a little less than an hour left to go in Monday's session. You can catch Breakout Investing every day on TFNN from 3 to 4 Eastern. Last hour of trading in the market each day. And after my show, you can listen to the boss, Tom O'Brien, from 4 to 6 Eastern. 877-927-6648. That's the number to use if you want to give me a call. If you can't listen to the show live, no worries. Head over to iTunes. You can pick the show up as a podcast. And don't forget, you can listen to all TFNN programming on your smartphone. Popular way to do it these days. Just plug those earbuds in. Open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. And finally, don't forget about Tiger TV on the homepage of tfnn.com, Channel 1. My show is carried live. It is archived on Channel 13. And if you want to watch Tiger TV on your handheld device, you can do that as well. Open your browser, type in tfnn.com, go over to the top right-hand side of the homepage, click that box, and it will start streaming right on your phone. Okay, so some warning shots fired across the bow last week. Wednesday and Thursday, we had some pretty significant distribution in the major averages. We had a low volume, non-compelling rally on Friday, and then we wake up this morning, we see futures pointed toward a higher open. Looks like, hey, maybe this little rally on Friday might mean something after all, and then splat, market falls on its face. Checking in on the S&P 500 here, about 50 minutes left to go in Monday. S&P 500 down near its session lows. It hit an intraday high today of 1525. It is now at 1505 or so, so about 20 points off its intraday high, down right now a little over 10 points to 1505. The NASDAQ composite. So go ahead and take a look at the NASDAQ composite here and see where it's at in terms of its 50-day moving average. You can see the NASDAQ composite is the closest to that support level. Trading right now at 3148. It's down about 0.4% on the day. So if you get a break below the 50-day line for the NASDAQ, I think, you know, we have this blue line here on the chart. That's the NASDAQ's last breakout area. So I think in the near term, a trip to that level is probably can probably be expected. I'm still in the camp that if this pullback gains a little traction, I'm not expecting, a bloodbath and broad-based selling here. I think a trip again for the NASDAQ composite down to its last breakout here area, call it 3060. 3070 thereabouts in that area, and maybe we find a little bit of support. But what we know right now is that the market is under some mild distribution headed into today. We had 6 higher volume declines on the New York Stock Exchange Composite Index, 4 for the S&P 500 and NASDAQ Composite, and it looks like another one is taking shape today. So that would raise it to 7 for the NYSE and 5 for the S&P 500 and NASDAQ Composite. That is reason in and of itself to be on the defensive here. If you target growth stocks like I do, you don't want to be out there trying to catch growth names on sale. There's a lot of unsettling action going on there. So in a situation like this, maybe it's okay to look for an occasional short opportunity. At least by shorting stocks, you're kind of swimming with the tide here. But I got to tell you, my growth screens right now aren't yielding me a whole bunch of there are some shorting opportunities out there, but I would think that there would be a lot more. I'm seeing some, and we'll write about some of those in my Ultimate Growth Stocks Weekly Update, which is going to come out tomorrow. That's my newsletter at tfnn.com. If you want to check out 30 days free, you can do that right on the homepage. Go to newsletters and then click on investment newsletters. Next weekly update will be out tomorrow. And as always, we'll have a watch list of long ideas, and if we see some stocks that look like they could be compelling shorts, we'll put some of those in there as well. My model portfolio right now only holds 3 stocks. I feel like I'm pretty well shielded from a market where clearly there is risk for more downside here. So there's no need trying to be a hero and thinking, hey, this is going to be a short pullback and it's only a matter of time before buyers come back into this market. I don't think that's the case. I think the stocks are finally ready to pause here. Collect their collective breaths, as it were, and so we'll see how it plays out. NASDAQ volume on Friday, pretty light at 1.55 billion shares. We are tracking higher than that today, so there is a little juice behind this. Selling NASDAQ volume right now tracking about 15 to 20% higher than Friday's level. Volume on the New York Stock Exchange, same deal, tracking about 15 to 20% higher than the 678 million shares that we saw on Friday. Europe is kind of back in focus here. They have the Italian elections going on. Silvio Berlusconi, controversial leader in Italy. He is making a very good showing here. I think at last check he was in second place, and I don't think the market likes that very much. They want to, so the markets, U.S. markets following the election going on in Italy, and the fact that Berlusconi is making such a strong showing for those that want pro-Eurozone and change in Italy. You don't want Berlusconi elected. So a little bit of apprehension there. Let's check in on the Dow here, the Dow Jones Industrial Average. And in fact, let me go ahead and pull up the Dow here for those watching in Tiger TV. And this is the Dow with the 10-day, 20-day, 50-day moving average here. Last breakout area for the Dow, about 13,400. Again, I think that's a possible resting spot for the index. If it does pull back, look for it to at least firm up a little bit in that 13,400. But the first level of support for the Dow, just like the other major averages, is going to be that 50-day moving average. For the Dow, it's 13,614. 13,614. A little reversal going on in the Dow today after hitting an intraday high of 14,081. It is at 13,923, down about 0.6%. So more sellers in the market today. Risk outweighs the reward here. I feel very comfortable saying that. You can see the big move in the CBOE volatility index, the VIX here. We'll see just a massive move over the past 4 sessions. VIX up another 19.4% today to 1692, and looks like it's going to make an effort to get back above its 200-day moving average. Sometimes these moving averages can be a resistance level, but the VIX, this thing can move 15, 20% in one day, like it's showing today. So sometimes these potential resistance levels don't end up being that at all. So, all right, first call of the day. Let's head to Miami, beautiful Miami, Florida. Talk to Dan, who wants to talk Apple. Happy Monday, Dan. How you doing?
Hi, Ken. How you doing? Long time follower.
Appreciate it.
Hey, my question is, I've been watching Apple today, and there's like zero volume, selling volume. There's basically no buying volume either. What do you make of that?
Yeah, it's just kind of a lackluster day for Apple. Hits a high of 455. It's kind of groping around for a bottom here. I think it's too early if you're trying to to catch a bottom here. Hits a high of 455 and it's back at its session low here at right around 447. 20. I think if you do get a dead cat bounce with Apple, wouldn't be surprised to see it make a trip to say 4 485, 490, something like that. So there could be a trade in the future for Apple. I think it's still too early right now, and the reason I say that is because you're looking at a broad market here, Dan, that is by the day looking more and more vulnerable to me.
Yeah, I agree. I just don't know.
And so it's just going to be, if the mild distribution that we're starting to see, it oftentimes that can turn into massive distribution, and then in that case, Apple, could try to take out its recent lows. So you're trying to look for a bottom here, around 445. It could be a mistimed buy.
Yeah. I'll definitely keep an eye on it, though. It's interesting.
Yeah, definitely. I mean, Apple normally on an average day it trades about 20 million shares, and you're right. There's no volume at all in the stock today. It's trading 9.5, 10 million shares so far today. So very, very light volume, and you want to see that when a stock, if you listen to Tom's show, you want to see lows tested in light volume. I think this the one thing Apple has going for it is a weak broad market that could get a little weaker here in the near term, and I suspect Apple will probably follow the broad market lower if that happens.
That's possible. Okay, well, that makes sense. I appreciate it. Thanks a lot.
All right, Dan, enjoy the day. Appreciate the phone call. Thanks. All right, Dan from Miami, looking at Apple here. Apple, just like the market, again, has reversed off its high, hits a high of 455, now trading at 447, and think it's too early. Think it's when you're looking to go long certain stocks, it really helps to have a market environment that's conducive to making money in stocks, and it's just very difficult right now. Even when you have stocks well off their highs that are testing lows in lighter volume, it's still very difficult for a stock to move higher when there's so much selling pressure in the broad market, and clearly we're seeing that again today. Friday's rally just wasn't all that convincing. Basic supply-demand principles, when you have higher volume declines followed up by lower volume gains, it still leaves the door open for sellers to have the upper hand, and that's exactly what we're seeing today. Now, if these the results in the Italian election come in to what the market wants, and a reform person is elected there, you could start to see renewed signs of accumulation in the major averages. But I'd rather just wait and see accumulation in the indices, because the only thing that's going to fix the distribution that we've seen in the market is renewed signs of accumulation. You need to see buyers start to gain the upper hand again, and until that happens, I think the risk outweighs the reward here. So let's also take a look at the home builders here. This is another area of concern here. The home builders have been a big pocket of leadership in the market, but you can see the ITB. We'll finish up talking about the ITB when we come back from the first break, but it's down 2.5% today to 2166, and trading near its session low underneath its 50-day moving average. So big sellers in the ITB recently. Be careful. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Right now, the Dow getting a little worse here. Down 100 points to 13,900. The NASDAQ Composite down close to 21 points to 3141, and the S&P 500 down close to 15 points, just barely holding above that 1,500 level. All right, let's check in on the home builders here. In a market that's under distribution, you're going to see a lot of these leading groups start to show signs of wear and tear, and you're really seeing that in spades with the home building group right now. And we can see the ITB here is trading near its session low, definitely ready to base and consolidate gains here like many other growth stocks in the market. That's what it looks like from my perspective. So right now the ITB underperforming today, down 2.7% to 2162. And you do have a lot of damaged charts in the home building sector, so I would be very careful about trying to catch these stocks on sale here as well. U.S. dollar index up a little bit today, last at 81.75, up about 0.3%. Some of the financial stocks under some pressure as well. Another big-time area of leadership in the market. Goldman Sachs take a look at a story chart here. Here's Goldman Sachs again with that 10-day, 20-day, and 50-day moving average plotted. Shares of Goldman underperforming by a wide margin today, down 2.9% to 149.59. It's been a big leader, but now underneath that 20-day moving average, which could bring a trip down to the 50-day moving average at 140 into play. So the 50-day moving average, certainly the lines in the sand right now for the major averages and for a lot of leading stocks out there, market leaders. I think that 50-day line, same situation. Let's see if stocks find support there. Some will, some won't, and we'll see, but the real strong stocks should see buyers come in and offer initial support at the 50-day moving average. April gold has a good day. I think I saw its highest one-day gain for the month of February. Gold, of course, has been under a lot of pressure. It settled at April gold settles at $1,586.60 an ounce, up $13.80 or 0.9%. Take a look at the GLD, and we'll see that it is up now 1% on the day to 154.48. So a lot of technical damage done to that GLD. Not clear that its trend is ready to turn upward yet, despite 3 straight days or 3 straight sessions of gains. April crude oil down 2 cents. That's it. Settles at 93.11 a barrel. Let's take a look at shares of Chesapeake Energy. This was a headline stock today. Oil and gas producer under quite a bit of pressure, down almost 6% to 19.28 on news that it sold some assets in the Mississippi lime play to China-based Sinopec. Heard Jim Cramer on CNBC earlier today said that Chesapeake did not get enough money for that asset sale. So that's probably what is dogging the stock today. Bond yields under a lot of pressure. Very interesting what's happening to bond yields here. Let's take a look at the yield on the 10-year note, and this is a chart of the 10-year note with the 50-day moving average plotted. Look at this huge downward move for the 10-year note. It's now yielding 1.89%. So big drop in yields today, but sitting right at its 50-day moving average, and the same can be said too for the 30-year bond. Also under a lot of pressure, but still holding just above that support level and holding above its 50-day moving average. The yield on the 30-year bond down to 3.09%. Did have some earnings reports to check on here, a whole bunch of earnings reports actually. Let's take a look at Hertz Global, rental car firm HTZ on the New York Stock Exchange. It earned 33 cents a share, a little bit better than expectations. It was up 38% from a year ago. Sales also a little better than expected at $2.3 billion, up 15% from a year ago. Hertz Global recently acquired Dollar Thrifty Automotive, so those results were factored into the most recent quarter. Company Hertz gave bullish full-year guidance, and here was a stock that was looking very good earlier in the session, hit an intraday high of 2037, but it has reversed with the broad market here. Still up 3.5% on the day, but trading right at its session low. And the competitor to Hertz would be CAR, Avis Budget Group, and nasty reversal in Avis Budget Group today. That's ticker CAR. It is down 1.5% today after early strength to 23.29. It hit an intraday high of 24.97. We'll be right back, folks. Stick with me. Breakout Investing on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
My Twitter pal Brian Sozzi just called today the Berlusconi bloodbath. So definitely the focus is on the Italian elections, the Eurozone here. So tough day for the markets. So nasty reversal taking shape, and each time I look, the market seems to be going lower and lower here. Right now, the Dow down 117 points, 13,883. NASDAQ Composite down 25 points to 3137. S&P 500 down 17 points to 1499. You know, when you start to see signs of distribution in the market, it is always a good time to start to scale back. The other option is just to let, small losses get bigger, and sometimes they get so big it takes a long time to recover from. So a big part of my strategy is just kind of, moving with the market. I don't like to excessively trade, but the volatility, is just out there. So you just need to be careful, especially with new buys. If you've got big cushions built up in stocks, you can afford to sit through some volatility. But we started taking profits, moving to cash last week, and don't have a whole lot of exposure to the market. And I think that's a pretty good position to be in right now. 877-927-6648. Let's go up to beautiful Pacific Northwest, Seattle, Washington. Talk to Barb. How are you, Barb?
Just fine, thank you. I'd like to know MX. I got in at 1804 and probably got in. I thought it was breaking out, but evidently it didn't.
Yeah, tough one here. Magnet chip semiconductor. And, the fact that it is below its 50-day moving average here, this is one that is not looking all that hot here. I think just a lot of growth names, Barb, are kind of vulnerable in this market environment. And it was last week. I think it was Thursday last week. I don't know if it was an earnings move or not. Do you know if this company recently reported earnings? Is that why it was down last week?
I'm not sure.
Well, I'm not sure either. But this is a chip maker, and as you know, it's also a very small company. So stocks like this, when the major averages start to bleed, and you start to see higher volume declines, which we saw last week on Wednesday and Thursday. Small stocks like this are particularly vulnerable. So. In a name like this, normally when I buy a stock, I'm always going to keep losses between 5 to 10% below what I pay for it. So this one looks vulnerable to me, and I will say that support at 1481 looks strong for now. So you're probably down a little more than 10% on your purchase price. So if it breaks below that 1481 level, then you're talking a move down to 12 possibly. So sellers look like they're in control here, and I just think there's probably risk for more downside here.
Okay, do you got time for one more?
Sure.
PRLB.
The 3D company, Proto Labs. Yeah, you're on the right companies here, but both of these names, when the market is showing signs of accumulation, this is they're going to be better longs. Proto Labs, I will say, looks a lot better than Magnet Chip. So what you have with Proto Labs, PRLB, this is a 3D printing company. They don't make the printers themselves. They provide 3D printing as a service. And what you have here is a stock that has been under a little bit of pressure, but all it's done is come down and filled its gap from earlier this month on February 13th. So support, I'm going to say, is going to be strong in the 41 area, and hasn't been a whole lot of volume behind its recent pullback. So I like Proto Labs a lot. I like it much better than MX. Again, we're just in a market environment right now where we've only come in about 2 to 3% off the highs. If the market comes in 4, 5, 6, 7% off its highs, some of these growth names are going to come down with it. So I would say a break below the 41 level here could open up a drop down to 35. So if you want to stick around and see if it finds support at 41, that's probably another 10% below where it's trading right now. But still holding above support. That's the that's the bright side.
Okay, thank you very much.
Okay, Barb, always appreciate the call.
Okay, bye-bye.
Bye. Yeah, gotta be careful with these growth names, no doubt about it. Proto Labs had a great earnings report on. It was either, let's see here. It was either February 12th or February 13th, but the stock had a big gap up on that earnings report, and then sellers have been in the stock ever since. But like I said, it just basically came down and filled this gap, and it looks like it closed near its high on Friday, and really is only down 29 cents today. So not much selling pressure in the stock, despite a rough day for the market. So this one hanging in there technically, and Magnachip MX looks a lot more vulnerable to me at this point. Other earnings reports, we've got the home improvement chains, Lowe's, L-O-W. Let's check in on Lowe's companies. Kind of a bearish day for this stock today, down 4.1% to 36.12. Heavy volume break below its 50-day moving average. They beat the consensus estimate by 3 cents with profit of 26 cents a share. That was down 10% from a year ago. Sales better than expected, helped probably a little bit by Hurricane Sandy. They came in at $11.05 billion, down 5% from a year ago. For fiscal 2014, that's its current fiscal year, actually, the company expects earnings of $2.05 a share, a little bit below the consensus estimate of $2.09. Now, we're also going to hear from Home Depot tomorrow before the open, so kind of a bearish day for Lowe's companies here. Home Depot, boy, man, there's just some ugly looking charts out here. Home Depot would definitely put in the category of ugly technicals here. Hits a high today of 66.55. It is now down 1.4% to 64.65. Trying like heck to hold on to its 50-day moving average. Home Depot's been a great performer in the Dow, looking quite vulnerable here. Not looking likely it's going to be able to hold its 50-day, but we'll see what the company has to say tomorrow morning. That's when earnings will be out. They're expected to earn 64 cents a share, up 28% from a year ago. Sales up 11% to $17.7 billion. We talked about the weakness and the persistent selling in the home builders. Lowe's under a lot of pressure. Home Depot under a lot of pressure. Remember Lumber Liquidators last week. Nice earnings report from that company. Look at what the stock has done Thursday, Friday, Saturday. Is just getting taken apart here by institutions. Lumber Liquidators down another 5.5% today to 55.47. Another growth name looking quite vulnerable. Checking in on shares of Visa and MasterCard. Both companies launched e-payment initiatives today. Visa's payment services will soon be available on Samsung smartphones, and I think news like that might help Visa, but when the market's going down, not so much. Visa trying to hold its 50-day moving average here. It is down 1.6% to 156.92. And shares of MasterCard. MasterCard today launched a digital wallet where consumers will basically be able to bypass checkout and just scan a barcode. So MasterCard not really moving on the news. It is down 1.6%, basically just following the general market here. Last trading at 515.24, but again, flirting with a break below the 50-day moving average. Let's check in on shares of Netflix. I like the way Netflix is trading here, and actually very orderly trading today. Very impressive performance again for Netflix. It is off its highs, but still no volatility in the stock. Up 50 cents today to 180.36. Reed Hastings, the CEO of Netflix, spoke today at the Morgan Stanley Technology and Media Conference in San Francisco. He talked a little bit about House of Cards, Netflix's original series. He called it, quote, a great success. Didn't give details on viewership hours, but he said, quote, we paid a lot for a property that we felt at the time had high odds of success, and it has met all our expectations. So Netflix continues to trade very, very well in this market. Let's check in on shares of Google as well. Headline from Google today, it's reportedly in talks with music labels about creating a streaming music service to compete with Spotify. Google doing a good job of holding on to recent gains. It has reversed, though, and is now down 0.9% to 792.58. Let's check in on 3D Systems. We just talked to Barb about Proto Labs, PRLB. That's a provider of 3D printing services. Well, 3D Systems, we heard from them earlier today, and definitely a stock looking vulnerable ahead of earnings. The earnings were not that good. I mean, when you're a stock that, goes from $28 a share up to $48 because of, increasing bullish fundamental views about the company's product and demand for that product, you can't go missing earnings estimates by 12 cents, and that's what 3D Systems did. Earnings up 44% to 26 cents a share. The estimate was for 38 cents. They also missed on revenue, which is a big no-no as well when you're a growth stock like 3D. Revenue was up 45% to 101.6 million, but that was below the consensus estimate of 103.9. We're going to hear from industry group peer Stratasys on March 4th before the open. Another stock looking quite vulnerable here, trying like heck to hold on to its 200-day moving average. This is a stock that, back in January was a $91, $92 stock. It is now a $64.19 stock. So another one you want to be careful about trying to catch on sale. So we'll see what Stratasys has to say on March 4th. And some other interesting earnings reports to keep an eye on this week. Mortgage servicer Ocwen Financial, OCN. It is working on, I think, a 7-session losing streak here, looking vulnerable now underneath its 50-day moving average, down 2.3% today to 36.65. Big growth expected in coming quarters at a lot of these mortgage servicers, name like Ocwen Financial, NationStar, Walter Investment Management, WAC. They've picked up some of these assets from banks that are looking to get out of the mortgage servicing business, and that has resulted in pretty good growth prospects for these companies over the next year or two. But when Ocwen reports on Thursday, earnings expected to be up 82% from a year ago, sales up 46% to $228 million. We're also going to hear from Priceline PCLN. Priceline reports after the close tomorrow. Look for earnings to be up 22% to $6.54 a share. Sales up 20% to $1.19 billion. Priceline not looking great, but looking a lot better than a lot of other growth stocks that I'm seeing right now, because it is still holding above support at 664. Some sellers in the stock today. It is down 1.3% to 675.61. So wouldn't be surprised to see nice numbers from Priceline. They do have European exposure, so the stock will probably move depending on what the company has to say about Europe. Here's a stock we recently took profits in last week, Salesforce.com, and tell you what, glad that we did, because it is down almost 4% today. The bottom kind of fell out of Salesforce. It is last trading at 163.91. They report Thursday after the close, so obviously some apprehension in shares of Salesforce ahead of earnings later this week. Kind of a bearish day for the stock, no question about it. Trading near its session low, hits a high of 171 basically, and now trading at 163.91. So big sellers in Salesforce today. Overall, the action in growth stocks looks unsettled, to say the least. That might be an understatement. And in a market environment like this, if you've been listening to me for any amount of time, I like growth stocks, but I like growth stocks in the right type of market environment. So it doesn't make sense to try to go out and be a hero when the market is behaving so poorly, and you see action like a Salesforce, like a 3D Systems, a lot of these big market leaders, and in particular the home builders. The action in the home builders is not looking good at this point. But again, that is what happens when sellers are in the market and sellers are in control. You tend to see your top performers really get hit with the hardest selling pressure. Catamaran Corporation, before we head into the break, they're going to be reporting Thursday before the open, showing excellent price strength here. Healthcare name, provider of pharmacy benefit management services. Thursday before the open, look for earnings to be up 46% to 35 cents a share. Sales up 141% to $3.3 billion. So Catamaran still looking pretty good here in a sketchy market. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Let's head to Boston, Massachusetts, talk to Shu, who was good enough to hang on. Shu, sorry I missed your call there. We were headed right into that break. Appreciate you hanging on. How you doing?
Good, thank you. I would like to get your opinion on TZA. I'm long at 10.58.
I think it's a place to be right now. I think it's a good trade to have on here. last week started showing renewed signs of accumulation. You're looking at over the past 4 trading sessions, so Wednesday, Thursday, Friday, and today, you've got 3 up days in higher volume. That is what accumulation looks like. This market, clearly looks vulnerable here. I would expect, probably a little more strength in the TZA here, but if its 50-day moving average at 12 is going to be the first major test for the TZA. So it's trading at 11.14 right now. See what it does when it gets up to that 12 level. It could get turned away. If it gets turned away in light volume, probably give it a little more room, because you could eventually see a breakout over what that $12 level, which could be potential resistance. So 12 is the level to watch here, but I like the trade because I'm not real keen on the overall market here. So TZA is going to obviously go up when the market's down, and we're in a market that's under distribution here. So I think it's not a bad place to be at all.
Excellent, thank you. And one more thing, I didn't understand that DDD, 3D system. I mean, it closed last Friday around 55 or something, and today it's trading at 34. How come it shows that it's down only 3 points?
They had a stock split.
Oh, they had a stock split.
They had their stock split, and it happened to coincide, I guess, with the earnings day. I think their stock split was scheduled for today, February 25th. So.
Okay, because none of the chart shows that it's a split, so it might probably take a day or two.
Yeah, let me just see if I can just find it. I do know that they split the stock. Let me just see here. Bear with me here. Let's see if I can. It started trading split adjusted today. So. Stock split. That's the short answer.
Yep, that makes sense.
Okay.
Well, thank you very much.
Okay, Shu. Thanks for the call. Appreciate it.
Okay, bye-bye.
Yeah. So 2 for 1. I don't know what the ratio was on that stock split. It 3 for 2. 3 for 2 stock split. That makes sense. Yep. So 3 for 2 stock split effective today in 3D Systems. All right, checking in on some other names here. I mean, just so many stocks looking vulnerable out there. And when I say vulnerable, the risk for more downside is definitely there. Look at a chart like Wynn Resorts here. Came down last week, fell below its 50-day moving average, rallied back with the market on Friday. You can see it popped above the 50-day moving average today and reverses in spectacular fashion. Seeing so many reversals today in a market that is definitely looking worse for the wear here. Let's check in on the major averages one more time. We'll see the Dow now down almost 200 points, 13,800, down 1.4%. Nasdaq Composite down 42 points, 1.3% to 3119. S&P 500 down 26 points to 1489. Our model portfolio went from 9 stocks down to 3. Happy to be owning 3 stocks right now. We'll decide what to do with current holdings that we have gains on for now, but next update is coming out tomorrow. Coming up next, the Tom O'Brien Show. Have a great day, folks. I'll see you back here tomorrow, 3 o'clock Eastern. Take care.